Hey guys, welcome back to the Financial Freedom Channel, where we make your money work hard for you. So today I want to talk about my top market for multifamily apartment investing. And there's a number of ways I went about figuring out what that top market was. And I'll lay out today why I'm so excited about this market. So, I don't want to leave you guys hanging. I know you're at the edge of your seats here. So the top market, my favorite market, is Sin City, Las Vegas. I'm going to tell you why I like Las Vegas so much. So the first reason is every year, a bunch of these different companies come out, Realtor.com, Trulia, Zillow, they come out with their top rankings for real estate investment markets, okay? Now they look at a few different things. One of them is cash flow markets. So they're trying to determine, all right, what markets are best for cash flow? Where are investors going to get their greatest return from income coming in every month from rents as compared to what they pay for expenses and debt service, okay? So the best markets, the best cash flow markets, according to these variety of services in 2018, Sacramento, Vegas, and Salt Lake City. And I was really looking at markets that are within 2 hours direct flight of Oakland, California. So I wasn't looking at the whole country. I was really just looking at kind of the West Coast, maybe as far as Salt Lake City. That would be about as far as I'd go. So Sacramento, Vegas, Salt Lake City, very high for cash flow markets. The other thing I was looking at is best appreciation markets. Okay, that's almost equally important in an investment. So the markets that these services ranked highest in 2018, Sacramento was up there, Vegas was up there, Salt Lake City were up there. So this is pretty awesome. You've got markets here that are ranking high in both cash flow and appreciation. Usually those don't go together. You look in the Midwest, where you're getting great cash flow. You can buy a house for pretty cheap compared to rent, but it's not gonna appreciate much. So Vegas is one of those unique markets that's got both going for it right now, appreciation and cash flow. And if you want to see the 2018 annual public rankings, there's a great place to look for that, Multifamily letter U.com. Look for the 2018 Real Estate Trends webinar. That's a fantastic way to really just understand those public rankings. So that's the first metric, the annual public rankings, Vegas. Love Vegas. The second method that I use to get excited about Vegas, it's called Local Market Monitor. Okay. Now this is a paid service for single family investments. Okay. So looking at markets, comparing the investment merits of single family. Now the cool thing about looking at a single family metric like this, a single family ranking service, is the multifamily market tends to trail the single family market by about 12 to 18 months. So if we know what the top markets are today for single family, we've got a good idea about what the top markets are going to be for multifamily a year and a half from now, which is fantastic. So Local Market Monitor, Vegas had an 8.9 investment score, okay? Now that number probably doesn't mean much to you. Doesn't mean all that much to me either. But Local Market Monitor has a proprietary investment ranking system. And the interesting thing is there's only one market above a population of 500,000 that was higher than Vegas, and that was Tacoma, Washington. Now, there's other reasons I don't like Tacoma, Washington. The price to rent ratio is quite high, which means if you're in Vegas, you're just going to get more bang for your buck. Also, it's not a very landlord-friendly area. The Seattle-Tacoma area tends to be a little tougher on landlords. Other numbers from Local Market Monitor that I like: 13% forecasted appreciation. So in the next year, single-family homes in Vegas are projected to appreciate in value 13% in 1 year. That is strong appreciation growth, guys. 3.1% job growth. Okay, very strong job growth. These are two critically important metrics for real estate investing. 2.2% population growth. Also very strong population growth. I mean, these are the things we're looking for when we're investing in real estate. We want people flooding into the market, population growth. We want employers flooding into the market. I mean, this is how people pay their rent, right? They need jobs. So the jobs are growing, and we got appreciation booming. So that's the second reason I really like Vegas. Local Market Monitor is very bullish on Vegas. Okay. All right, the third one is Yardi Matrix. Now, this is a free service for multifamily. Okay. And I'll put a link down below so you can check that out. Vegas, according to Yardi, is number 3 for year-over-year rent growth. Year-over-year rent growth. Okay. I think it was like 5.9% in the renter by necessity asset class. Now, the deals I'm looking for Class B, Class C properties. Those are the value add apartment opportunities. And we're really looking for renter by necessity asset class for those. So that's the number I pay attention to. Sacramento and Orlando were higher. The only two big metros that were covered by Yardi that were higher, Sacramento and Orlando. I already told you why I'm not so bullish on Sacramento. The price to rent, the cost to buy a house versus the annual rents from the house are too high for me. Much better in Vegas. And Orlando's just too far. I'm not going to travel back and forth to Orlando to look at apartment deals. I'm just not. It doesn't sound like fun to me. 4.8% forecasted rent growth, according to Yardi, for multifamily. Very strong. Here's an interesting number. Completions as a percent of total stock. Okay. Now what that tells us, and that number is 1.3 completions. So this is telling us about the supply, the apartment supply that's coming online in Las Vegas. Now we want this number to be under 5. Okay. And obviously 1.3 is significantly under 5. Anything over 5, and I start to get nervous because there's potentially too much supply, which could drive down rent prices, which is not good for an investment. So that's an interesting number there. And then we've got 5.5% vacancy. Okay. That means if you've got a 100-unit apartment building, you're going to have 5 or 6 units that aren't filled, and you just got to build those out into your numbers. This is fairly typical across the larger metros in the country, so nothing to be alarmed about there. So that's the third kind of information source that tells me, yeah, Vegas is looking really strong. And then one more I want to cover. We are apartments.org. Now, what We Are Apartments does is it predicts what the actual supply of apartments is going to be over the next 12 years until 2030. It predicts how many apartments we're actually going to have over the next 12 years. And it also predicts how many apartments we're going to need. Okay? So it kind of projects the supply and demand of apartments. Now, Vegas is projected to have, we're projected to have less than 20,000 apartment units in Las Vegas by 2030. Okay? And you go on We Are Apartments, you look at the Vegas Metro, it'll show you those curves. Now, we're projected to need 90,000 units by 2030. None of the markets I looked at in We Are Apartments have this kind of discrepancy. I mean, there is going to be so much more demand for apartments than there is supply. So this is the fourth and final reason that I'm super excited about Las Vegas. It seems like the demand is going to be much higher than the supply moving forward, which is really going to drive rents up. It's going to drive investment returns up. So that's what I wanted to cover, guys. Top markets for multifamily investing. Top market, Las Vegas. So hit that subscribe button below if you haven't done so already. And thanks for being here, and I'll see you next time.